What financial systems existed in ancient civilizations? Have you ever wondered how ancient civilizations managed their finances? The financial systems they created laid the groundwork for what we know today. Let's take a closer look at these fascinating systems. In Mesopotamia, around 3,000 to 2,000 years before the Common Era, one of the earliest financial systems took shape. Temples and palaces acted like banks, offering loans to farmers and merchants. They recorded financial transactions on clay tablets, using symbols to representing quantities. This method served as contracts to prevent fraud. Notably, they introduced the concept of interest, with some documents showing early forms of compound interest. This innovation helped cities manage resources and sustain populations not directly involved in food production. Moving to ancient Egypt, we find the development of grain banks. These banks stored harvests and issued grain receipts, which acted as a form of currency. This system allowed for trade and economic exchange without the immediate transfer of goods. By managing surplus and shortages, these grain banks helped stabilize the economy. In ancient Greece, financial systems became even more advanced with the introduction of standardized coinage around 600 years before the Common Era. This innovation made trade easier by providing a common medium of exchange. The Greeks engaged in money lending, currency exchange, and even early forms of insurance, especially for maritime trade, which was vital for their economy. The Roman Empire took financial systems to new heights by establishing formal banking institutions. Initially, temples served as places for money lending and deposits. Over time, private banking houses emerged. Roman banks accepted deposits, made loans, and facilitated currency exchange. They introduced financial instruments like bills of exchange, allowing money to be transferred across distances without physical transport. Public financing also developed, including the sale of public debt to fund government activities. Roman bankers, known as argentarii and numularii, conducted transactions in public forums and marketplaces, using benches called banci, which is where the word bank comes from. These ancient financial systems were essential for trade, resource management, and the growth of cities and empires. They introduced key concepts such as contracts, interest, currency standardization, deposit taking, lending, and early credit instruments. These innovations can be seen as early technological impacts on finance, much like modern financial technology innovations that aim to secure transactions and facilitate trade. Understanding these ancient financial systems shows how foundational financial technology has always been. From clay tablets and grain receipts to coins and banking institutions, these developments set the stage for today's complex global financial markets.